Hey, so my credit score basically ruined my chance of getting a business loan at one point in time when I tried to get one. And basically because of that, I'm making this video so you don't have to go through the same thing. So my name is Ben Kofi, aka Credit Kofi. I teach business owners, moreover small business owners in the United States of America, how to gain access to funding so they can gain access to the freedom. So in essence, I teach you guys how to gain access to the money, the moolah, the bling, and the ka-ching. Let's get it in, let's get it. So if you're a business owner, in the United States of America, okay, and your credit score is silently sabotaging your business dreams of gaining access to cash in order to scale up or to even start up that business, okay, to get those tens of thousands of dollars to invest, I'm going to tell you or show you some pointers which you need to pay attention to. So basically, if you've missed a payment over the last 24 months, sometimes even longer than that, that's going to go against you gaining access to any sort of funding. If your credit card utilization is high, let's say it's over 30% and you're going or you're teetering on 40, 50%, that's going to affect you also. Let's say you've got a credit score below 680, 700 really and truly is the benchmark in the USA in order to get funding at a decent interest rate, because let's not forget, you can gain access to funding even with a 450, but the interest rate is just going to be simply predatory, okay, and it's really not going to be worth your while. And here's the thing, if your score is too low, it doesn't matter how strong your business plan is, basically you're going to get a denial, okay. Your revenue basically won't matter, okay, and basically it won't matter because of the fact that they're looking at the fact of whether or not you have managed your money well on the personal side. So 700 and above signifies to the banks that you are safe and you are low risk. What your personal credit must be in the USA. So what I'm going to do is I'm going to be highly specific, and I've kind of alluded to it earlier on in this video, okay, as far as what your credit score needs to be. So I'm not going to be vague, I'm just going to hit you with it. In the US, you need 680 plus on the personal side. That's the entry level in order to gain access to credit cards, lines of credit, etc, 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 okay. 700 to 720, okay, is deemed as being strong or higher, okay, in order to get higher limits, especially with credit cards as well. So if you're below 650, you're going to get higher interest rates, you're going to end up paying more, and it gets into the predatory kind of subprime kind of field, if you will. So don't look at personal credit as being evil. It's basically the foundation. If you've managed your money right, you're good. If you haven't managed your money right and you've got bad credit, there's always an option of credit repair. The turning point: personal versus business credit. So this is where a lot of business owners out there set up to get got, okay? They set up and they basically get trapped. And I'm going to tell you exactly how that happens. They keep on fixing their credit. Now you're probably thinking to yourself, fixing your credit, hey, that's a good thing, right? But they don't graduate up to or onto business credit, where you can gain access to anything from 10 to 100 times more than what you can with personal credit. Now here's the difference. So personal credit in essence is tied to your social security number, your SSN, okay? You're limited as far as the amounts of which you can get, okay? One singular mistake, okay, on the personal side could basically hurt you completely as far as getting any sort of funding on the personal side as well as on the business side. Now your business credit is tied directly to your company, your EIN. It's based on your business activities, okay? And you can grow exponentially, or you can't grow exponentially without it over the span or time of you having your business, let's say 5, 6, 10 years, etc, etc, okay? You can still grow but not exponentially. So when done right, in essence, okay, your business credit basically means higher limits, okay? No personal utilization, because utilization doesn't even exist on the business credit side. You've got complete protection, okay, as far as your personal credit is concerned, because the two are completely separate. And in essence, that's how real companies out there in the United States of America basically scale up to be these big, massive behemoths. How to separate them? So here's a clean, proven, tested method, if you will, or pathway, okay, for smart business owners to take. Now, number one, what you want to do is you want to get your personal credit to at least 680, okay? No shortcuts, no magic, okay? This is basically entry level. If you're not there, you can use or go and seek or go and do some research into credit repair, where you can get items or late payments removed in order to boost your credit score. Number two, okay, you need to legitimize yourself and separate yourself from being the person and turn into an entity. An entity meaning an LLC, a C Corp, an S Corp. You need to get yourself an EIN number, okay? You need to get yourself a business bank account. You need to look professional, or moreover, get a professional presence. Number three, you need to establish business files, okay? Equifax, Experian, the big behemoth Dun & Bradstreet, okay? That have credit reports or your business reporting to them as far as your business credit is concerned. Step four, okay? You need to start with a business line of credit, not random cards, okay? Not personal guarantees, okay, that are going to be forever and a day. Now, this is how you basically build your foundation. This is how you stop begging the banks to negotiate with you, and they start to open up their doors, and they actually start to chase you to fund you, because you become a lot more credible.